Welcome, and thank you so much for joining me on this Sunday. Thank you for clicking on this video. It means a lot to me. It means a lot to my family, and the goal of this channel is to overall be helpful, and that's why we went over the macro scale on Saturday, talking about the good confirmation for the SPY, talking about the good confirmation for the Qs, and talking about the confirmation that we were looking for all week long with the VIX, telling us that volatility was going to pop off, even stating how the market likes to manipulate things to do funky things into OPEX. And we suggested that they were going to blame some stuff on August 1st, and that ended up being the case. So we are doing very well with this, but we have to stay on track with the shorter time frames to figure out where we are heading on the daily, because bounces do come. So we have to do some technical analysis today. We got to help you guys out by giving you some weekly expected moves for the week ahead, and maybe we'll even help you out for tomorrow by giving you some daily expected moves, because if we get a bounce, it looks like we are still likely to reject that bounce as we potentially go test back into this high. So let's get into it. Daily scale is in positive territory. Anytime that curls up in positive territory, this thing most likely will be done. But I think we have some time drawn out here to go down into potentially the mid-September, September OPEX. That is what I overall assume. Let's go into the 2-hour time frame and get you guys the weekly and daily expected moves to start off the video for the SPY. Then we'll go over to the Qs and get you those levels as well. So if you need to pause at these times to get these levels on your charts, if you have two screens or something like that, that would be fantastic. We see to the upside, we have 636.69 to the upside. We have 606.75 to the downside. Let's just talk about these weekly expected moves first. This is a 68% zone, so 68% of the time you will land on Friday close in between these purple lines with a 32% chance to see something a little crazier and end outside of them. Just so you are aware, people saw this big drop, so that volatility could be priced in. So don't think that because you are going through something right now that might not be overall priced into the options data that I use to calculate these things, but we'll just watch it very carefully. So 68% zone, 32% of the time you'll land outside of it. Very, very interesting. So if I was suggesting that we were going to make a new high this week, would that be a higher percentage probability or a lower one? That would be lower, which tells you that the weekly expected moves are now shifting down, which overall tells you that any kind of bounce you do get, you are very likely to reject from those levels. Even if the 2 hour is able to curl up to that weekly, it is very likely to roll that move. But we do have the daily expected move, and is this 2 hour looking like it will curl up? Well, the daily expected moves of 628.43 to the upside for Monday and 615.01 to the downside for Monday is a very good thing to pay attention to, because as you initially get the first drop, a lot of the time you will come retest into that kind of area before you drop back down again. You want to see a retest of that area and a failure of that area to confirm down to potentially go to the monthly and weekly expected move. So not only is the upside move very interesting because it states that it is a lower probability to make a new high, but the lower one is very interesting because it is right by our monthly expected move. That means that this will be a heavy area where we are very likely to bounce from. So if you get reversal signals towards these levels here, towards that yellow and purple line this week, pay attention because we could get some kind of bounce from there. And I think that that will be a dead cat bounce when we're able to get there. Now the 2 hour is by the center line, so if that crosses up, we can go make a new high, right? Technicals would tell us we can go make a new high. We're just utilizing this information, but does the 2 hour overall look like it's going to turn around from the shorter time frames? I like to utilize shorter time frames to tell me if there is weakness and momentum there, to see if the 2 hour is able to curl up, and I use the 30-minute chart to do that. As we look at the 30-minute chart, do we see a higher low? Do we see a divergence as of right now? You do not. You really do not. Now, if you really look at this RSI, you can see that it's pointing slightly up. So that tells us that there's most likely 15-minute or 5-minute divergence. This is why I put out the video on Patreon suggesting, hey, if you're opening up those put positions, those short positions, whatever kind of position you're taking here, sometimes it is better to wait for that retest and then reloading around here. That was overall the discussion during market hours on Friday. But the main thing here is we do not see a higher low. we do not see a divergence that tells us that the momentum is shifting back or could potentially shift back to the upside. So we need to pay attention for that to form, and that could take a few days. As it stands, that upside weekly or that upside daily expected move for Monday with the 5-minute, 15-minute divergence, we could get some kind of bounce that takes us to retest that 5-day as it starts to come down and reject to go down to lower levels. Maybe this will be the moment that we are able to go down to the weekly expected move or the monthly expected move, or both, since they're right next to each other. And then we can look out for reversal signals right there. So for Monday, I don't want to go too deep into it because I'll be updating you all week long here on YouTube. So make sure you are subscribed. This is overall for Monday. It looks like if the 30-minute is able to curl up, it is deep into negative territory. There is no divergence suggesting that we're going to reverse around trend. And it looks like we would just go up for a test of the daily expected move and the 5-day, and then be able to roll that move into later on in the week. Once this roll does take place, that is when we will pay attention for some kind of bigger move to the upside. That's overall what we're getting at for today. As of right now, hasn't curled up, so there is always opportunity that it can head lower, right? The bigger time frames, there is no positive momentum showing here as of right now. There is no curl up from the 30-minute by the end of the day on Friday. There is no curl up by the end of the day on Friday for the 2-hour. So this overall suggests that we could keep waterfalling to the downside, but most of the time you will see a retest of these kind of levels before you're able to head down there one more time. Now is another point where we are going to get you guys those weekly expected moves. So once again, if you need to pause at this point and get these levels on your chart before we move forward, this would be a good time to do so. We see 568.95 for the Qs to the upside, and we see 538.81 to the downside. What do we see that is very, very similar about these levels to the SPY? These levels are not suggesting that a new high is very probable for this week. It is actually suggesting a retest into these type of areas, and rejection seems to be a higher probability. And if you look to the downside, you can see we are stacking up some lines towards about 538 to 539. So you may want to pay attention to that level for reversal signals. Now, I think those reversal signals will most likely only be on the 30-minute chart, and the 2-hour will get some kind of dead cat bounce from there. But that means paying attention to Monday, we need to really watch these daily expected moves. We do see 560.65 to the upside, and we see 547.11 to the downside. We do see the same thing as the SPY on that RSI down there. So there is potentially 15-minute or 5-minute divergence. If you would like to potentially see that, you can see a rejection divergence. Yeah, so you don't even, once you get good at this stuff, you really just know that things are there. You see a 15-minute rejection divergence, and if you look at a 5, it's just going to be nice and spread out, and you'll see a bunch of divergences there trying to go positive, looking like we may roll into Monday open. But the important thing for Monday is, yes, we can continue the selling, but does this have signals to reverse around the 2-hour right now? The answer to that question is no, you do not. You do not have a reversal signal in the form of a higher low. You do not have a reversal signal in the form of a divergence right now. This would take time to overall form, which means on Monday, with these potential divergences, we may want to go retest into these type of areas before seeing the next drop. That would mean I'm paying heavy attention to 560.65. If you look at the positioning of the MACD, something we talk about heavily in the swing trading course is positioning of MACD. Very important to understand negative and positive territory with the center line here. This is extremely negative. So if you're in an extremely negative trend on your MACD, it is very likely that any kind of bounce you get, you will continue that trend. And I wanted to make you very aware of that. Now, we like to put things together to see if we're getting similar things from the VIX on the SPY at the same time, and you will see 30-minute divergences here on the RSI. If you wanted to, you saw the 15-minute divergence for the Qs, but it's probably there on the SPY as well. You will notice that in the near price action, what do you have? You have some divergence points here for the MACD, and on the RSI, you have divergence points holding pretty much all the way down on the RSI. So this means you are heavily likely to see some kind of pull back from volatility. But as you are above the 5, it is very likely to continue. So as of this moment, it looks like volatility is going to see some kind of pullback on the potentially 30-minute or hourly chart, and then it is going to be able to curl up into positive territory again. That seems to be the most probable thing going into Monday. Yes, this thing can just pop off if Trump wants to do something, if more news comes out or something like that. But if this is going to be regular market movement, a lot of the time volatility will back off, convince you that this is some kind of bottom, and then it's just going to blast off to the upside, and you're going to see a little bit bigger drop, maybe down to a monthly expected move. So for volatility for right now, it looks like it is in a very good positive trend, but for Monday, maybe going into Tuesday, it looks like we could potentially get some kind of bounce. But we're not trying to predict the future. We're just overall going through things to pay attention to and react to when the signals actually confirm on our charts. That's how I like to do things. Yes, I have my opinion. Yes, I have my I thinks, but the thing that I do know is I trade based off of the indicators. That is the whole point of technical analysis, is utilizing patterns, utilizing divergences, and trusting those type of things. And something like weekly and monthly expected moves can really help you. So Patreon members, if you go look right now, the weekly expected moves are up there on your chart. And I did put on the second standard deviation for those, so you can have not only the 68% zone, but the 95% zone in case some of those stocks do see a little bit more volatility. The important thing to keep in mind here for volatility is the daily scale has turned up. And until that turns down, you're potentially in a corrective mode. And I think that we could correct all the way into September. And there is a scenario for November, but I don't want to get ahead of ourselves, to about 3770, right in that gap area towards 3770. So watch out. Volatility is here. This is a fantastic time. It tells me, hey, stop swing trading, and overall, look for your other strategy, which is the doubling strategy that I like to utilize during high volatility times. If you want to learn that strategy and learn about all the things that we're talking about today, like the monthly expected moves, like the weekly expected moves, like divergence, like the MACD, like the RSI, get it set up on your charts, like the 5-day moving average. All of these things you can learn for 90% off for my birthday. And because we're going into heightened volatility, we are doing 90% off the full technical analysis course. So if you want to learn this stuff, if you just want to stick around and watch videos on YouTube and try to put it together, I think that's fantastic. I really hope that you're able to. But if you want to get it for just $100 right now, it is down as the full technical analysis course in the link in the description. Apple has confirmed down dramatically on the daily with earnings. I would expect some snapbacks and things like that, unless it really is going to tear Apple down. There are no reversal signals from Apple. It is the 2-hour, which is also pretty dang negative here, so very unlikely to be able to do this. More likely, if it does get a bounce, to roll back down after retesting that 5-day. Do we have any signals for that to actually bounce? You do not. You can see you have no divergence on your MACD, no divergence on your RSI. So Apple's going to be in trouble. Yes, as it is super, super oversold, we can see some kind of bounce, but you would be looking for another rejection for a higher low, for a divergence at this point for Apple. I just wanted to switch right over to Tesla because I think Tesla is super interesting. It actually is attempting to do somewhat of a wonky higher low for the 30-minute. So I wanted to look at the 2-hour chart. And if you really look at the 2-hour chart, you may be looking at these levels down here because it's with the closing of the bar. It is slightly down, if not flat. You see on your MACD on the 2-hour that you do not have potential divergence here for the MACD. But I think it is very interesting, and I would just keep a close eye on it in case I was really bearish on Tesla. Not saying that like a short play right now can't work out, but overall just suggesting that if you're trying to do it here when a potential divergence on the RSI this steep is forming, I don't know if Tesla has a short sell problem, if Tesla does crazy things, guys. So if Tesla is able to cross up on this RSI, if it's able to get a good confirmation from the 2-hour above the 9, you do have some probabilities that say this thing can try to take back that 5 and be back on the bull. You have potential divergence on your RSI, not on the MACD. So this is overall what I call a pretty average looking signal. How I like to do things is kind of like a 1, 2, 3. If I see one thing, if I see one signal, then I'm willing to bet X amount of money. If I see 2 signals, I'm willing to bet 2X amount of money. If I see 3 signals, I'm willing to bet 3X amount of money. And that's how I like to do things to keep my position size managed. You will also learn about the management of the trade and position sizing. We use like percentages of the amount of money you have to teach you how to utilize certain amounts of money especially when it comes to options, because you have to be risk managed, especially if you are doing options. So risk management and how to manage your individual trade is actually down there in the full technical analysis course if that is something you struggle with. This is overall just to be helpful to you. I'm not trying to convince you that Tesla is going to skyrocket. I'm saying if Tesla curls up on the 2-hour, I personally myself would not want to be in a short position because Tesla is a wild stock and there is a divergence on the RSI. Amazon fell off a cliff with the 2-hour divergence on earnings. Okay, so we're not going to say, oh, technicals are perfect here and shout out technicals, technicals, technicals. I think a good thing that Amazon can teach you here is just, wow, Amazon went up for a long time. It really struggled to get another full breakout moment, but kind of did this slow daily dragging higher off the 9, and then it ends up falling with earnings. What's very likely to happen here? Well, the 2-hour is super negative, super oversold. Does the 30-minute have any chance to reverse around with a higher low right now or a divergence right now? You do not have that formed, so that most likely will form over the next few trading sessions for a 2-hour bounce. That means that Amazon could go up potentially into a price point of, I would say, about 225, maybe a little bit higher, and then roll that move. And if you're able to make a divergence, maybe you even see it drop down lower and make that divergence later on by a weekly expected move, which is over there on Patreon. This would just be what you're overall doing here. Something for Amazon that it can teach you in a moment like this when volatility is heightened is you can use your skills, but when I talk about my strategy, it does include a bit of patience. This means that for Amazon, I would want to be patient as far as a short position because it's very likely to get a snapback, and then I can look here to look for those type of opportunities. If I'm looking to play some kind of dead cat bounce, well, then I might have to be patient for a few days to see if a divergence or higher low shapes up for Amazon. NVIDIA looks great, but NVIDIA did something, and we'll talk about this a little bit differently. We actually suggested that NVIDIA could go make a divergence up here and then fall. And guess what? It makes the divergence. It makes it very significant on the RSI. That's able to tip over the 2-hour. And we mentioned, I think on YouTube, but especially on Patreon, how the 2-hour divergence is just so steep here. And you see that held from the original point on your RSI as well, and you're curling over. So you're closer to the center line, you're more likely to go negative. What could overall happen here for NVIDIA? If the 2-hour is able to curl up, you can still go make a new high. You're in positive territory, so we have to talk about NVIDIA a little bit differently. If the 2-hour is able to snap back, if you see the 30-minute give a higher low and it just crosses up the 2-hour, you can go make a new high for NVIDIA. But the thing is, with NVIDIA for now, it's much more likely that the positioning of the MACD for the 30-minute is suggesting if we do get an upward move as we're trying to make a very short time frame higher low, it is very likely to extend that move to maybe a weekly expected move, but I would say something like 180, and then roll that move to overall make the right shoulder that could have been. You may hear people talk about head and shoulders a lot of the time, but a lot of how I see head and shoulders and a lot of the hints the market can give you is if it actually breaks where that neckline is and then comes back to do it later. And that is something I call the right shoulder that could have been. And I think NVIDIA is very likely to get that over the next coming days. So this means if I applied a short position at the lows here, and then I see that snap back and I see a shorter time frame higher low, it might have been better for me to wait for that position to come up into these areas and roll beneath the 5 one more time to say, hey, we want to make a new low, and maybe we want to head down to test something like 165 for NVIDIA. AMD, I would love to comment on this for AMD, but you have so many stocks that just had earnings. You have so many stocks that already have elevated implied volatility. AMD, if you want me to check it for you, its implied volatility, I believe, scaled up above 100%. Let me go check on that. It was at 95% for the implied volatility for this Friday. So that means either way you play this, I'm sure you can make money. You just have to be quick with it, and you have to hopefully not get theta burned, because a lot of the time you'll say, okay, well, these options are expensive, but they'll make money pretty quick. I'm going to take 175 or something like that. And then it kind of does this and just kind of stays in this area until earnings. And then you see that thing make some kind of move. Earnings is just a rough boat, guys. Earnings is something that I learned just not to play over time as a trader. Once again, this is all information based on my experience, based on my skills, and I just say things that hurt me in the past to hopefully help someone understand how it can hurt them now. And if they can understand that without losing a big amount of money, I think that is a very, very good thing. Earnings is a very difficult time to make money because the implied volatility is high. So if you don't see a big reaction, you can get theta burned, meaning it could just decay. The options could just decay and you just lose money, even if you're slightly right, right? Even if you're slightly right, it can. And then the other thing is someone already knows which way AMD is going to go. AMD could be a tool to make markets remain higher for a little bit and cause a reaction from NVIDIA. AMD could be used to send markets lower because they just want to crash NVIDIA. That's how it goes. So I try to stay away from stocks that do have earnings during their earnings week. And that's just the best thing that I can say to you today about AMD. Besides the fact that it's overall negative on the 30-minute and stuff. But if we go into the technicals here, earnings can just wipe all that out. So earnings to me, 50-50 flip. If you want to gamble, I suggest management of risk. Meta just had its earnings, and I think Meta is very interesting here. Is it going to just dump all of this, or is it going to be able to make one more pull here? So how we will treat Meta here is just very carefully on the 30-minute. If the 30-minute is able to curl up into positive territory, you see a green bar like this, you see it cross up on that RSI, then it is very likely to test the high, go make a new one. So this is where you can utilize like weekly expected moves. And if the 30-minute curls up and you see a big reaction, it could get to that weekly expected move and tell you kind of what the options market was actually pricing in with real data behind it. Now, the 2-hour is not necessarily in a risky spot here. The 2-hour is just in positive territory. If that curled down, yeah, you can just retest that 5 and curl right back up. So Meta doesn't look like a lot of risk. But Meta just had earnings to shoot it up. And if they wanted to FOMO trap people for Meta, earnings might have been used for that. And you'll notice that the main signal you need to be watching on Meta is the daily chart. So I wouldn't be very confident taking calls to 800 or something. I think it's very possible that the 30-minute could curl up and set some kind of trap on Monday. But for now, the main signal that I wanted to show off for Meta was the daily divergence. You overall see that we're making higher points. You see that the MACD, if that would start to cross down, how close would you be to negative territory? Very close, which means likely to go into a negative trend, see bigger sell-offs. The other side of that is the RSI. The RSI has not violated any of the divergence points, and it is holding the original point. So right now, you do have a divergence for Meta. So if the daily is able to cross down here, it looks like Meta will start to stair step its way down to about 643. And if we start to go past those levels, we will talk about it later on. But for Monday, you would say if the 30-minute curls up, I can see a new high, but watch out for some kind of divergence or something like that, because I still think Meta is overall going to pull back on the daily to at least 640. Microsoft. Now, Microsoft was able to violate a lot of the divergences because it's been so squeezy on the daily scale, but you do see that on the MACD. So as far as what we discussed earlier, now I have one that I saw, daily divergence on every single one. Okay, that might be a 3x, right? But if I look at Microsoft and I was looking at my position size and I say, oh, this is only on the MACD, when that confirms, I'll only have one signal and I'll have the fact that we are dramatically up and in need of a retracement. That's not necessarily the best information. So if I were potentially to take a play on this, this is just to help you potentially with position sizing and how I think about it. If I don't have a lot of reasons and I only have one reason, then I don't put as much money behind that overall trade. And that's how I like to discuss it. I still think Microsoft is some kind of FOMO trap. I think that this will end up being funky, but I think it could go all the way down to 460 before it is able to curl back up. But just because I think that doesn't mean I'm not paying attention to what actual information that I utilize for my trading. Whether I think it goes down to 460, I don't care. Anytime this makes a 2-hour divergence, maybe by a monthly expected move, that's mainly what I pay attention to, then I will be looking at Microsoft very carefully for some kind of reversal. I think Google overall suggests that this could be pretty quick. I think it definitely suggests something like that. So maybe it's drawn out for some time, but Google just needs some kind of pullback. Once again, earnings is done. It was able to make 2-hour divergence after earnings on the MACD and the RSI at the same time. So you have multiple reasons here for Google to see a pullback on the daily. So this trade makes total sense to have a bigger position behind, and I think that's perfectly fine. So What is overall something you need to pay attention to for the 2-hour chart? If the 2-hour curls up into positive territory, where is it? Well, just that, positive territory. So that's when you can violate this high, go make a new one. So if the 2-hour crosses up, that's not necessarily a good thing for puts, obviously. But the 30-minute for Google is not necessarily suggesting like, oh, this is all fine and dandy. You see how deep it is down there. There is no divergence formed yet. There is no higher low formed yet. So that means I could potentially be patient with this and look for that higher low to say, okay, that 2 hour is going to cross. Or I could be really patient with it and say, okay, a divergence will form, and you'll see a shape kind of like this on your MACD where the price is going down, but this is going up. And maybe you see it on the RSI at the same time, and that encourages you to take some kind of position. I think that's perfectly fine as long as you are managing your risk and understand exactly what you're doing. So for now, it looks like patience will be a thing for Google. But if you were able to catch this move, it was very quick. So that's why I took a lot of profit to the downside, not necessarily on Google, but with my volatility play. AMC. Now, this guy has earnings this week. And I know, you said, I say I don't play earnings and things like that, but I did see this funky little 30-minute divergence for AMC towards the end of the week. And I said, why is this happening when they overall just got like a price raise to, I believe, $4 from a lot of analysts? And then at the same time, they just like dump off. Now, I'm going to go back through this for a moment. I say this in a few videos, and I think AMC and GME people need to hear it. Anytime you see a reversal signal for GME or AMC, it plays out like almost 100% of the time to the downside. Anyone that plays to the upside, it can bounce and fail, but pretty much every single time I've seen, I think in the last like 2 years, seen a 2-hour divergence for AMC, it has dropped. And we mentioned this for AMC a little bit ago. 2-hour divergence on your RSI, and overall you got confirmation of that. You drag it out for a bit and you dump off. The 2-hour divergence is very likely to curl down the daily scale. Is this a good thing? No. You have potential slanted structure to send you much lower. You have a potential lower high, right? So this is overall saying a new low is very probable. But I just thought it was interesting that earnings was coming up, and I think that I want to be a part of this if it is going to see some kind of move. And I did see a 30-minute divergence that attempted to confirm at the end of Friday. So I went ahead and started piling in towards $3 in this area. Now, when I say piling in, what I like to say with these plays is, I think it would be fun if AMC ran to like 20 bucks or something like that. I think that would be really, really cool. And I want to be a part of it if it does. But am I going to risk my house? No. Am I going to risk a good weekend? No. Am I going to risk a good lunch? No. I'm just going to risk an amount of money that blatantly I do not care about. And that's how I like to do it with AMC. I do hold on to a bit of the stock, and I do hold on to a bit of GME. GME actually showed the same things. Now, if you're paying attention to GME, we were suggesting watch this level at this dotted line. That's where we're doing price action stuff. We do teach that in the full technical analysis course. But these are all 30-minute divergences on AMC and GME for the 2-hour to curl up. The problem with these 2-hour charts is they are very negative. So most likely this is not going to be some kind of massive moment for GME, but I hope it is. I hope that GME is able to do good stuff, take back the 5 and start stair-stepping to the upside. But as of right now, you would be looking for a higher low or a divergence from GME to really tell you that it's going to turn around. If you would like me to prove to you the last time that we were talking about GME being able to turn around, we can go back to this time, and I look out for daily and 2-hour divergence. You will notice that at this low, we were mentioning, hey, isn't it funny that GME has a 2-hour divergence on the MACD, on the RSI kind of flat at the same time. And then we also mentioned that there was daily divergence at this point as well. So if you come back over to that point, which is way over here, I don't know why the chart did that, but you will see as well there is daily divergence at the same time. The reason that I'm pointing this out is because that's normally what you see before a stock starts to really reverse around. We've seen that from the SPY as well, and you are potentially creating that right now, but has it overall proved itself? No. So you do have a period of patience here. If you see things change, you can react, but it looks like we are potentially going to make some kind of divergence, if not already making a double bottom. And if this is able to curl up on the daily scale, GME might have a chance to run next week, but I don't really see good things from the 2-hour. So yeah, we'll see, but hopefully it runs, and hopefully you guys have some fun with it if it does. The big thing to remember here, especially when trying to take calls when you do see a lot of things negative, is I like to be patient and wait for a great setup, especially each week when I get new weekly expected moves. I like to look for when everyone is bearish and I see a 30-minute divergence and then we see a big 2-hour bounce. And then I like to look up here, and once we go to a weekly expected move, I like to see a divergence up here, and everyone gets bullish and says it's the bottom, and then I buy a bunch of shorts. That's how I like to do things in this type of market when volatility is above 20, and volatility over here is above 20. So to summarize the video, though, if the 2-hour does curl up, you're close to positive. You can go test that high, go make a new one. Your weekly expected moves are not suggesting that. If you go into a 30-minute chart, you're noticing that the 30-minute hasn't shown you anything that really says, like, hey, we're going to turn that 2-hour around and go make a new high yet. So I might need to be patient for that. The most probable thing to happen on Monday, in my mind, is two things. Either continue to do what we're doing, as we have not confirmed any momentum up for the SPY, or go up and retest that 5 and start to create potential divergences or higher lows to see which direction this overall market wants to go in August. Thank you guys so much for joining me today. I really do appreciate it. I hope you were able to take something helpful away from this video. That is my overall goal, is to help you, even if it's one little thing like weekly expected moves, and you ignore all the analysis that I do because you don't like it or we're too different. That's perfectly fine with me. I just thank you for being here, and I hope you are able to take away enough information from this video here that you can go and pay attention to what is important. Go out, spend time with family, buy yourself a nice lunch, go sit on a bench and enjoy some sunshine. It is a great time to be alive, and you can't convince me different, because that's how I see things. I have people around me who I love and they love me, and I get to spend time with them every single day, and I appreciate every single day for that exact reason. So don't sit in front of a computer screen all day. Make sure to go spend some time with family. I thank you for it, and please tell them that I say hi. Have a fantastic Sunday, and peace out.